Hello, hello, hello. How are we doing, everyone? Welcome back, folks. How are we doing today? Before we get into it, if I could get a quick mic check. How are we doing, everyone? All right, sweet. We're ready to go. Sigma ICT, welcome back. Thanks for joining us. Denisha, hope you had a great weekend as well. Thanks for joining. Momentum Trader, my man. Eubene, hello, hello. Papa Vlad, what's going on, brother? Anita, thanks for joining us today. Earl, all good. Thanks for joining us, brother. Mr. Solomon, hello, on time as always. Hope you had a great weekend. I sure did. Hope you all did as well. Fendi, hi to all. Thanks for joining us, brother. Ashley, what's up, my man? All right, awesome. So we got a full house. Beautiful. Silent, what's up, brother? Awesome. So welcome in, everyone. Thanks for joining us today. So we're going to be doing the usual. I know we got quite a few new people in our community, on our Telegram, YouTube, and the rest. So with that, I'm going to do a brief introduction into what we're doing, especially for the newer folks. So we're going to be doing our typical intermarket analysis, pre-market prep. Why is this helpful? So many people ask about daily bias. How do you do daily bias? And how are you so accurate with it? The reason being is because there's a lot going into my daily bias. And for those of you guys that want to improve at your daily bias, this is what you want to be watching, because this is me going through how I determine my daily bias. And it's not as simple as just looking at one market. It requires a lot of supporting factors and confluences using intermarket analysis to solidify a firm bias. Whether you're a Forex trader, you trade indexes, commodities, this is the place to be for your analysis. And then once you start applying this on your own, you'll start seeing the same level of precision that we display here on a weekly basis. So with that, let's go ahead and get into it. Hamza, first time joining. Thanks for joining. LN, hi Dylan. Cycloss, hey brother, trust you're doing good. Yes sir, my man, hope you are as well. All right, lovely. So let's go ahead and get into it. So looking at the monthly chart for dollar index, we have been calling this market higher, and let's go into some supporting factors as to why I was looking for that. So looking at the monthly chart, for those of you guys that have been with us for some time, you guys know I am longer term bullish on dollar. Longer term being a monthly chart, I'm looking to see 116s and then eventually 120s. So I saw this retracement here to a discount. So looking at the dealing range from low to high, where's the first discount array that exists within this PD array matrix? This fair value gap in here. So this is why this was my downside target as we were bearish. And then I told you guys I want to see how we trade there, because how we trade there would be influential. And then we saw relative equal lows. We purged it and rejected it, indicating order flow is bullish. So I've been taking everyone's attention to this premium fair value gap and buy side liquidity on the way up to that. So the monthly chart is a supporting confluence. I'll also go into bonds, yields, and how I further called higher dollar, which is a risk-off environment, meaning we're looking for lower foreign currency and lower indices or stocks. So with that, longer term, I am looking for this fair value gap to be traded to. How and when we trade there will be useful to me at the time, but just taking it one step at a time, I am expecting this month to trade higher and going into September. So dropping down into the weekly chart, again, equal lows, sell side liquidity. I covered how this would be an intermediate term low real time. Reason being is because if market makers are going to reprice higher, shorts have already been trapped in the market. So they're not going to give them an opportunity to either get back in long or close out their shorts. So it's going to rip it against them. So what's our bias been the past couple months? Bullish. And looking at this candle, 1, 2, 3, 4, 5, 6 consecutive weeks of upside delivery. And what does that mean for our foreign currency traders? You're looking for lower euro, lower pound, Aussie dollar, New Zealand dollar. They're all going lower because of this. Indices have also seen weakness as a result. So we are seeing bullish order flow. What does that mean? Discount arrays are supporting price higher, while premium arrays are being traded to and through. So for example here, sell side, we rejected it. We get above this fair value gap. So for people that just turned on ICT 2022 mentorship, watch the first video, they look at this fair value gap as, oh, that's a short, we trade into it, and then we look to go lower off that. What's missing there is narrative. You have to understand multiple factors, and that's why this is complex, because it requires layered analysis. So because I'm bullish on a monthly chart, I'm going to look for reasons to support that on a weekly. So I told you guys I wanted to see us trade to and through this and then use it as support, which we did. Rallied higher. Looking at last week's trading, we had this weekly inversion fair value gap that I took our attention to. And this will be much more significant on a daily chart, but we did use this as support exactly as we were expecting, delivering higher into that rejection block beautifully. So overall, not the cleanest delivery intraday as it is August, so no surprise to any one of us, but we are still having targets hit. So moving forward with that context behind us, what am I looking at going into these next few weeks? So I am still looking for a higher dollar. My next target would be the buy side above this swing high, and then the buy side here, which we were looking at the last few weeks. So I'm still expecting that follow through on the weekly chart for dollar index, and then longer term, taking us into this sell side imbalance, buy side inefficiency on a longer term. So with that, let's drop into our daily chart. Oh, finally got the mouse situation fixed, by the way. As you guys can see, mouse there, we can see that. Lovely. Good work, Abraham, my man. All right, so looking at the daily chart here, I want to take our attention to this weekly inversion fair value gap that we were looking at last week. So Monday's trading opened here, and then that's when I did my analysis, was after Monday's trading. So seeing this, looking at this weekly inversion fair value gap and bullish breaker here, or mitigation block, they would both be correct in this case. I said I wanted to see support at this specific level. Reason being, because we've already seen bullish order flow, the market is showing a willingness to go higher, and we're showing support at all key discount levels, being this fair value gap in here. This purple shaded rectangle is the weekly fair value gap. Use that as support, not able to trade down to midpoint, indicating bullishness. And then I took our attention to this fair value gap real time and told you guys I wanted it to act as inversion. So when we were trading down here, I shared with you guys that I wanted us to get above this daily fair value gap and then use it as support. So how am I able to do that? It's because I understand narrative, because I know where that weekly chart, monthly chart is likely to go. I'm just looking for my lower time frames to manifest that delivery. So with that, I was looking for this to be support. We saw that, we rallied. So that's how I was able to look at this weekly inversion as support, kissed it once, touched it once more, off to the races into our premium objectives. So targets last week was this buy side and then the weekly rejection block. Still looking for this buy side and then eventually this buy side here. Not sure how many weeks that's going to take to get to, but keep in mind it is non-farm payroll protocol this week. So having that in mind, we could see quite a bit of animation in price delivery this week. So going into this week, what I will be looking for is I want to see acceleration through this rejection block. I do not want to see price get lethargic or weak in here. I want to see it rip to and through to the buy side here and here aggressively. So looking at this, I do not want us to get below this down close candle. This is all a balanced price range, all this back and forth delivery, and then we've left it. So I do not want to see us get below this balanced price range. And what am I referring to as the balanced price range? From this high to this low. Extending that through. This has all been efficiently delivered. So I do not want to see us get below this. So going into this week, how we open Sunday trading into Monday will be influential for me. And I do want to see the market find support inside this down close candle, or preferably even the volume imbalance. And then I do want to see us take off into the buy side here and here. So looking at the 4-hour chart momentarily, here we see all the sloppy back and forth price action, which is what we expect in August. So are there setups? Is this tradable? Absolutely. There's just other things I would rather do with my time than trade these conditions here. But as I said, there are still setups, and there are still precision elements that exist inside of this price action. So as I said here, all this back and forth is balanced, efficient delivery. So I do want to see us trade higher. So my lower time frame point of interest, where I do want to see us rally from, is this breaker. So here we have low, lower low. This up close candle makes our bullish breaker. We traded into that Friday and then rallied higher for the rejection block and trading to that buy side. So what I do want to see going into this week is I would not want to see this breaker violated. We can trade back down into it, but that's not necessary because Friday already did the work of trading into that discount array. So we could just trade higher from this volume imbalance. However, my bias is invalidated if we do get below this breaker. Then I'll just have to wait for more information and reassess where we're at the time. However, I am looking for higher prices, and I do want to see us rally from this bullish breaker in here. So with that, let's take our attention to the bond market. All right, so looking at the weekly chart for T-bonds, we have been looking for lower prices, more specifically the equal lows here. We got that delivery. So one thing I do want to point out is we have taken significant external range liquidity. So once we take out external range liquidity, the market is going to want to likely pull back into the range and seek internal liquidity. So given that we traded into this the previous week, and then this last week here, we dug into that low a little deeper, and then we saw a retracement, which is completely fine, given that we have had 1, 2, 3, 4 weeks of consecutive bearish delivery. So a retracement or an up-close candle is to be expected. However, I am still higher time frame bearish, and I'm going to avoid calling a bottom in this market. Looking at the monthly chart, I took our attention to this last week. I am expecting us to trade down into these down close candles, this bullish order block. And then how we trade there, I will be looking for the equal lows in here. So I am still very much bearish bonds, which is supporting my bullish bias in the dollar index. So looking at the weekly chart, order flow is still clearly bearish. Inversion fair value gap, trading into that beautifully, rejecting it. Hitting this up close candle, bearish order block, smashing lower. So I will be expecting continuation on the downside. However, we could still retrace more into the range. So we'll refine this as we go through our time frames. So dropping down into the daily chart, as we see clearly bearish order flow, taking out that key external range liquidity and then pulling back into the range. So we have traded higher into this mitigation block, which is this last down close candle right here. So here we have a mitigation block and a volume imbalance. So we can retrace a little deeper into this range, and how we trade there will be influential. I do not want to see us get above these last two down close candles. If we trade there, then that's where I would expect a sell-off. However, I would prefer to see some of this fair value gap here left open and treat it somewhat as a measuring gap to the discount objectives that I'm looking for down here. So that's what I'll be looking at on this week in bonds. Just briefly touching on the yields, seeing the same thing. External range liquidity pulling back into the range, no surprise there. Finding support from consequent encroachment of this inversion, fair value gap here, bodies respecting that beautifully, and then off to the races to the targets that we were looking for. And then, as we said, pull back into the range. So again, how we trade inside these two down close candles will be significant. I would want to see yields rally from these two down close candles, and then that will further cement my risk off bias. Looking at the 10-year yield, seeing that same bullish order flow, hitting that external range liquidity, and then a retracement. So the market can trade down into this volume imbalance and even this fair value gap in here, and then I would want to see how we trade there. As I said, I prefer to see this fair value gap here left open. That would be extremely bullish if we do see that. However, I will be monitoring how we trade inside these discount arrays and see if we do continue resuming higher from these levels. So that's what I'm looking at on dollar index and bonds. So with that, let's go into our euro real quick.